Ladies and gentlemen, K Kim here. Welcome to the market update. Hope you guys are having a good weekend. This weekend, today's Saturday, late morning time here. So as we're getting near to the election next year, there's a lot of fear, there's a lot of uncertainty, a lot of jitteriness, a lot of skepticism about this market. And so one thing I want to let you guys know that it doesn't matter where the market is, man. It doesn't matter where we're at. It doesn't matter what event. There's always something to be afraid of this market and the mainstream media and just fear collectively as a whole, and the price action and the news. Whatever they're pumping at, whatever they're emphasizing, it is designed to make you feel fearful. It is designed to make you feel uncertain, right? And so, just looking back to 2016, just think about, all the market crash scenarios, mainstream media publications and news, CNBC covering, global, quote unquote, global market meltdown leading up to the election in November in 2016. You guys remember, just a quick glance at it. This was 2016 here, right? I remember because I was long, I was trading, and you hear so many things here. First, you hear something like mother of all head and shoulder formation. A lot of people are talking about mother of all topping pattern. And also a lot of people are, technically speaking, a lot of people looked at this as, look at that, man, that's a neckline. That's a textbook neckline, break. That's the head and shoulder confirmation. Some might have drawn a neckline this way, kind of accommodate that low. And then so I remember when this thing got up a little bit and came back down here. Let me draw that again. So something like this here, right? Like that. We got the left shoulder, head, right shoulder. And technically speaking, back in 2016, it was a very fearful state. I actually started going long here. 2015, I had to adjust some positions somewhere up here, but started going back long, adding more. Remember the Brexit? And this was leading up to the election. That's when Trump got elected. So just look, it doesn't matter where. I just remember how horrendous it was, just fundamentally, and also technically some of the levels. I remember even, we saw these corrections here, sharp corrections here, sharp corrections here, sharp corrections here. And, it really did, and a lot of people are calling 2015 and 16 as a bear market. I think maybe I was the only one talking about looking at the primary term that we were never in a bear market, when you look at the primary term. But yeah, underlying, I think some, under the hood, some of these sectors are crashing, some of the stocks were crashing. But as far as S&P is concerned and the NASDAQ, some of the big indices, they were nowhere near the bear market territory, because we were never in a downtrend looking at the primary things. We never cultivated low lows and lower highs. We were kind of more in this kind of sideways phase. And a lot of people looked at this a major topping pattern. On top of this, a lot of issues are going on at the time. There are a lot of fundamental economical issues that we are going through, right? Technically, it wasn't looking good either. And then just all these mainstream media is pumping out. You guys remember, it doesn't matter who's going to get elected, Trump or Hillary, market is going to come down 30%. If Trump gets elected, market is going to crash 45%. You guys remember what happened the night when the Trump got elected, the night of the election. And just what happened was the futures were crashing hard. Social media going crazy. I think that one of the worst tweet I've ever saw on that night was, end of the civilization. Somebody said the end of the civilization has begun. And that all of this that I just explained to you, all that commotion happened throughout 2015, 16, all throughout this rally here prior to the election. And you know what happened after the election through 2017. Biggest, fastest, right? Most emphasized bullish rally we've seen in 30 years. I covered this in late 2016 through 2017. This move right here. This has been the strongest rally we've seen in like 30 years or something like that this year. I think so. Basically, entire year, this market only corrected 5%, and I talked about this probably in 2017. We're not going to see anything more than 10%, right? So we only saw about 5, 6, 7% correction. A lot of people are also bearish back in 2017. Summertime right here, and I was bullish throughout that whole time. I was buying these dips here, and one of my best year came in 2017 because I was accumulating longs in this vicinity. I was pretty active writing blogs and why I was long and things like that, doing a video. There's still video if you want to go check it out. The video that I published back in 2016 here, somewhere in that vicinity. 5 reasons why stock market crashed not. Right? 5 reasons why stock market crashed not. Because there's just sentiment was bearish. Not just on social media, but just everywhere. Most people were not bullish in this market back in 2016 all throughout. And after that kind of fear, this market produced one of the biggest rallies ever in 20, 30 years. And a lot of people missed that. And what I'm saying is, what I'm saying is, don't pay attention to, man, what these people are saying, what everybody else is saying. Don't pay attention to what news is saying. Just observe price action. If this market was gonna get into a bear market, same with 2016. If this thing was gonna go into a bear market, it would have never made new highs here. Right? What is higher high? That is a part of an uptrend. Market is ready to resume with this uptrend, with this higher highs and higher lows. If this market was actually getting into a bear market, what we would have seen is something like this, that. Lower highs, lower lows. We never saw that. Despite the fact that how horrendous, whatever they're pushing, right? The ideas that you have is because you're listening, right? Listening to the TV, listening to the dumb box, listening to some guy on Twitter with 300,000 followers and who's a frequent guest on CNBC and saying all this thing is going to happen. And you're listening to quote unquote billionaires, right? People are saying back in 2016, well, okay, on my video, that 5 reasons why stock market crashed in that video. Well, are you better than billionaires, Kay? You know more because all the billionaires, well, they're expecting a crash. Well, joke's on you now because you missed out this entire rally because you're listening to some billionaires. I'll tell you what, man, these billionaires, I don't trust them on TV because they got billions of dollars in the market. They know market is going to do opposite because the market always fools the majority. And I'm not accusing anybody. I won't be surprised to say something on TV and doing the completely opposite, buying your shares when you're selling it in panic and then making money off of you. Anyway, so if the market was gonna crash, man, we would have never made that higher high. We would have already started cultivating lower highs and lower lows. I've said this many, many times, this entire rally here. If the market goes up and make new all-time highs, very, very almost impossible because statistical probability suggests this market has never, go back and check. We see 30% or more correction. And then this market goes back to all-time high in that same year. And then within that same year, not even next year, this market comes all the way back down, either retest the lows or making lower low. That has never happened in the history of stock market. And some of you are going to think, some of you are going to say, well, this time is different. Yeah, keep saying that. Keep going after that maybe 1% chance. That's what you can do. Go in a casino, man. Trying to go for that lottery winning and do some of those jackpot winning. People do win, right? And I'm gonna go after some which has a higher probability success rate. I'm not looking for jackpot. I'm not looking for lottery winning. This is a reason why I was able to stay through in 2016 and was able to ride that, big bullish run that came in 2017, right? This is a reason why, this is the main reason why I survived this horrendous massacre in March decline, started buying these lows, as you guys know, right? And became one of the biggest buying opportunity for my portfolio because of COVID decline. We're up here. And something I always say is it doesn't matter we're at 360, 320, 275, 225. Fear is always there. It's always real. Was it easy to buy the dip at 225, 230? No. Is it easy to buy this at 325? No. Was it easy to buy at 300? No. Was it easy to buy at 270? No. Because it's never easy buying anywhere. You never see a condition where it's ripe, it's perfect, it's great, it's no-brainer. Once I actually, if I feel like this is no-brainer long, I would actually sell everything. Like CNBC, Bloomberg, MarketWatch, Yahoo Finance, all these jokers on Twitter, if they all bullish, everybody's bullish, everybody says if you buy money, this is no-brainer, I'm going bearish. But as long as there's fear, I'm going to remain bullish. And obviously, I need to substantiate that with price action, right? And I just spent 10, 12 minutes for you guys on this intro. What's most important than just giving you guys these technical levels, some of those fundamental or technical analysis, but understanding these things. This is more psychological, the market psychology, right? I think that's what made me become better in the market. Because, man, I mean, at the end of the day, everybody's looking at same levels. Everybody's talking about same thing because everybody's listening to same thing. So it has to be where you gotta start thinking about these things. What is majority of people are thinking? And because the market tends to fool the majority, right? And this is what I like to say, market fools the majority. Therefore, the majority follows the fool, whoever that fool is. And then a lot of times the majority ended up getting screwed. So anyway, let's go to that 65-minute chart real quick here and talk about it. Just real quick, just follow up on the daily video here. So it looks like this was yesterday. It looks like we gapped down, and then we continue to tank here. First hour, second hour, third hour, we hang around, and this was that kind of micro term pivot right there. It looks like, and we're hanging around below it. But good news is that for the buyers, that we were able to come back up, poking his head up above it. But keep in mind, in the short term, we're still in a downtrend, lower highs and lower lows. So in the short term, we want to continue to give benefit of doubt to the what? Bears, right? In the short term. So let's zoom out and check out that midterm. So midterm here, this is where things get a little bit more important. So in the midterm, we talked about that higher high in the midterm. And we're technically in slightly that higher high. We have not. And I've been, using June as analogy this week on my daily update videos. I'm not going to go to it, but you can go back and check those videos and see what I was doing. In June, we saw similar price action here where the market came down, got up, huge tankage. And what I talked about was, in June, despite the fact that it was a huge tankage and fast decline, things were very, very shaky. right? It never breached below this low right here. We stayed up. There were a lot of volatilities up and downs. We were bearish in the short term. In June, near the June lows, we never saw the price getting below, right, that low right here. And then, well, what happened was slowly market kind of got back up. Obviously, you know, we don't have enough data at this point to say that we're seeing bullish, because we're still bearish. We're still bearish in the short term. And you might ask, well, when would you turn bullish in the short term, okay? Well, first of all, you see these two gaps. I need to see at least this gap getting filled and start cultivating higher lows and higher highs, breaking above this resistance. Until then, so somewhere about here, I think, once I see higher low and higher high in the short term, that's when the sentiment is going to change to bullish in the short term. And if we do that in the midterm, it's going to start to turn more neutral to bullish. I'm still staying mostly neutral in the midterm, not bearish yet. Why? We don't have that lower low yet in the midterm. So if anything, we're still in a sideways market. What is sideways? Well, that's what you call resting pattern, consolidation, congestion, market resting before continuing. We don't know which one, what it's going to be. Is this going to be a sideways, or is this market ready to break lower and start cultivating lower lows and lower lows, getting to lower lows and getting into a downtrend in the midterm, right? And that's what we're trying to figure out, in the last couple of weeks, is that, well, what is this market doing? We know that it's just short-term bearish, but what's it doing in the midterm, though? That's where, again, we need more data to figure it out. But as of today, as of now, with the data that is at hand, we're going to continue to be a little bit more neutral. Again, resistance here, right? Resistance here. Right, so we got these fan lines, we got these gap downs, and things are going to make things hectic here. Let's check out that oscillator. So what we have is on this oscillator, we have a somewhat similar bullish divergence kind of occur here. This one's a lot bigger though. This one is a lot more potent because this one has a lot more ranges here, as you can see on that oscillator. This one has a much smaller ranges, so that's kind of it's less potency at this point, unless we have some bullish properties here a little bit. We haven't even begun to see the cross either. So it's very early stage. For this to be confirmed, this thing needs to at least get up here and fill this gap. It needs to get taken out. This pivot right here at what, 331, right? Let's go back to daily chart here. So on the daily, as you can see here, so this is kind of rising pivot we talked about last week. Rising pivot here, and it's a very similar, kind of a similar price action to, I think, 2019. We got that rising pivot, we got this rising pivot, we got that V-shaped reversal, we got that V-shaped reversal. We made a back up to new all-time highs, pull back, and starting to kind of ride that rising pivot before making another run here. We got up to the new all-time highs here and starting to kind of pull back, kind of starting to ride that rising pivot, right? Like Mark Twain said, market or the history does not repeat, it rhymes. Obviously, it didn't repeat. It doesn't look same as this, but it's similar. It's kind of rhyming at this point, and I know a lot of people are going to say this is head and shoulder formation. Sometimes what the market likes to do when you have a head and shoulder formation like this, because I remember people are saying the exact same thing here. That's a left shoulder, that's a head, right shoulder. Again, you can go back, probably even check my video back in 2009, October, addressing this. A lot of people think this is a head and shoulder formation. I think that a lot of people get faked out on this, and people are going to get scared out of this, and market is going to make its run. I think we might have something similar here. We have this head and shoulder formation, and then, we might break low or something like that, just create a little bit more panic, but I wouldn't put too much, weight on that potential pattern. Remember what I told you, head and shoulder, I haven't seen head and shoulder play out since 2012-13. because everybody's looking at them, it doesn't work anymore. And so zoom out a little bit here. You see my long-term moving average right here? You see that light blue but thicker? That long-term moving average is here, that going here, that going here. Well, guess what? That's kind of where we found support on Friday at lows. We tagged it, my long-term moving average. And then we saw a market, by some dip buying activities here, and we're able to get back above this rising pivot. With the hammer candle there, again, these candlestick analysis, it needs a follow through to the upside, right? Again, even we had a candle in a hammer here, but you can see how it never played out very swiftly. It didn't play smooth. We did see a candle, we did see kind of a follow through, but next day we came down and then finally made a move. So sometimes it's smooth, sometimes it doesn't. It's still tough to say, but we are holding above the resistance there, not resistance, but the pivot and that long-term moving average there. And actually at the same time, that's the horizontal pivot. So we're kind of hanging around, and so buyers are doing as much as he can to prop this thing up, not breaking low. We got that, rising uptrend or that pivot. We got the long-term moving average here. We got the horizontal pivot also. So we're kind of all trying to keep this thing falling from any lower, and buyers trying to protect this level. And I have to say that I think this is what it looks like, a double top, and that we need that kind of fear. Market doesn't like to be like, market first like to condition everybody to be complacent, and then likes to create fear. So this double top is definitely what it looks like, a double top, definitely creating fear. A lot of people are looking at these charts nowadays, even newbies and all Robinhood trade. They're all gonna start looking at some of these charts, and then they're gonna pick up some other things that like, okay, that's a double top, that's scary, right? And then how market is, it likes to kind of create certain panic, create certain fear before making a move. My entire strategy for trading and investing is buying the fear and selling the greed. And that's just kind of one of the things that everybody says, what Warren Buffett said, right? Be fearful when others are greedy, be greedy when others are fearful. But it is extremely, difficult to master, and it's easier said than done, because there's a short-term sense, there's a mid-term sense, there's a long-term sense in that statement, right? And there's a macro-term sense also. So, looking at the overall picture on the S&P here, long-term picture. So in the long term, are we still in bullish uptrend? The long term, yes. I mean, the long term, the market is cultivating high, and that's a subtle higher low, but it's still in that vicinity of a higher low. And we could have said the same thing. Let's say if this is today. Let's say this is today, right? This doesn't look too good, right? Let's say this is today. That looks like it's waning down. It's getting heavier, right? And again, if we see, look at that. Let's say if this was today, right here. Let's just say that's today. That looks similar to today, right? Right there. Let's say if that's today. A lot of people what do you say when you look at this chart? Yeah, that doesn't look too great, man. That looks like a head and shoulder formation. It looks like this thing is going to break down. I mean, after the V-shape, well, guess what everybody was saying back in October 2019? Back to the lows. And you guys, again, you can go back and check. What I was saying is, you know what? I want to continue to give benefit. And those are subtle, but those are higher lows. We got some higher highs here. It's been elevated. Let's see how this market plays out before we don't jump into any extreme conclusion, and then some up and down here a couple days. But you know what happened? Market did make a move and finally broke out, and obviously, man, nobody knows, and that uncertainty is bringing a lot of fear to many people. But sometimes you do have to stick with what the data is telling us as of today, as of now. Things can change, obviously, going forward. So I'm trying to do my best here to give make you guys equipped to prepare what is to come. And you know what? You know how your mindset would be? I suggest that you shouldn't be too nervous about it. Just go through it. Don't watch futures, because like I said, in 2016, the day Trump got elected, futures are tanking hard. Next day, market rallied and kept rallying every day. Don't worry about the futures. Don't check the future. Don't worry about what all the media is talking about. Just kind of stick with how you've been positioned in this market, and then face it. And then once the market gives us certain, more price, more data, you can either adjust a little bit and then you can go from there, but never conjecture, never come to a certain conclusion just because you're fearful, just because what you're hearing, just because what you feel. You know what I mean? Like, I would always say, if you're feeling very, very fearful and bearish, that's probably bullish. Because again, market likes to fool the majority, and if you're feeling like bullish, that's probably a little bit and what majority of people are thinking, right? All right, so let's go to Qs here a little bit. So Qs, this is the pivot here. That's a strong pivot. That is a strong pivot because it's coming all the way back down to 2018. So this is a very, very strong. This is what I like to call rising pivot, right? And so NASDAQ got up here and coming down, hitting, and again, this is where this is where people are gonna get very, very scared, especially when you're looking at the NASDAQ here, right? Like, wow, look at that move. Okay, we had a just straight up move. We're doing a little bit of double top here. Doesn't look good. Again, your eyes are deceiving. I've seen it so many times where it didn't look good, and here, let me give you here. So. It's a little bit different, but right here, a lot of people said back in 2016, well, that doesn't look good either. Look at that head and shoulder formation. That doesn't look good. And then market just gone crazy to the upside. And I get it. This time, we have much more very crazy up move here to the upside. And a lot of people are comparing today's price action with the high valuations on these tech stocks. They're comparing it with the .com bubble. Trust me, I have actual data, factual data that is nothing like 2020. We're not even close. It might feel like it, but we're not. So again, when you look at certain things, when you feel fearful and you feel like, this market can't go any higher. People said the same thing in 2010, man, 2011, 2012, 2015, 16, 17. As long as this market is in an uptrend as we are, that's a massive higher high. This is a good price action. We want this market to continue to cultivate higher highs and higher lows. We may consolidate here. Doesn't mean this market can do anything it wants, but statistical probably suggests that there's a good chance that this market continues higher on the NASDAQ, even. And you say, well, what if this thing breaks lower? Well, I've seen it so many times there that it will do such a thing sometimes, and just scare everybody out. People like, that's a neck light, man. That's, you know what I mean? And then this thing goes right back up. So I want to remain bullish in the long term, right? I want to remain bullish in the long term with the data that is hand, and that's how I've been, doing well in this market for many years, because I don't overreact, and I don't come to some kind of extreme, ideas just because it looks something. But what I do is, I'm going to stick with it. I'm going to stick with what it look. You know what I mean? I'm going to stick with the uptrend. The market is still in an uptrend. And you'll be surprised how quickly things can shift. Just remember March lows, how things looked really bad, and how quickly that fear dissipated, right? And then there was excessive greed. Right? And why do you think this market isn't pulling back? Well, most people missed out this movement. They trying to chase it up here after this bounce, right? And I talked about this entire time, last several months, that after this pullback, a lot of people are looking for a steeper correction, right? And a lot of times market isn't going to give it to them. So then not a lot of people, I think, went long here. So then when this thing started going up, a lot of people probably chased it up here, and then market just punishing those chasers. But let's say if you're already long down here, you're sitting back, you're sitting cool, because you know what? We're still in an uptrend. Market isn't always going to be pretty. Market sometimes does. It has its up and down shenanigans, but we want to continue. As long as the market is in a primary term uptrend, which we are, we want to continue to give benefit of the doubt to the buyers. And any kind of steeper decline, I look at that as an opportunity. Let's go to semiconductor. So semiconductor is looking a whole lot more bullish than any other indices at this point. We got that pivot here. I drew a couple pivots, but we're not even there yet. And you can see semiconductor actually made a higher high while the other indices failed to do so. So semiconductors are looking very much more bullish as far as technicals are concerned. We're still above that my midterm moving average. We haven't even begun to retest that. So yeah, semiconductor looking very strong here. And I want to continue to give benefit of the doubt to the buyers. Dow, so Dow hasn't created this. Dow is the only major index that has not cultivated new all-time highs, but Dow Jones Industrial Average did. So I actually want to look at that also. Dow Jones Industrial Average did, but no. Dow Jones Transportation Average. Dow Jones Transportation Average did. But Dow Jones Industrial hasn't. But here looks like potentially some kind of a double top. I wouldn't go by that at this point. We got that pivot here and this pivot, and we got this gap area currently trying to, let's move this down. We're trying to kind of hold here. This actually in Dow, we kind of broken right slightly below it, but again, never go by those slightly below type of action, because I think a lot of people are saying the same thing in March, man. Not March, back in May. Remember if you're trading in May and you're listening to different people on Twitter and things like that, how much fear they came about with this decline. You guys remember, this was May. Look, people are looking at this head and shoulder formation, right? Again, go back and check what I was saying back in mid-May, and then they say, I won't be surprised. A lot of people look at that as some kind of a breakdown, that topping pattern here, and market is going back to the March lows. Guess what happened? We just went straight up. And so again, never get faked out. How long are you going to be faked out like this, That again, if we see this kind of pattern happening in a downtrend, it's more reliable. Like if this is a major downtrend, then we start doing double tops. Yeah, that's reliable. But it's different story when it's in an uptrend. We are in an uptrend, as you can see here with the higher lows. And we're just kind of in the sideways mode. And market does that. That's totally normal because we see a big up move. We did. And then let market kind of digest its gains, right? Consolidate a little bit. And when the market is in the consolidation state, what the market likes to do, just so the market can fake you out, and you're looking at these levels in precision, like, oh my God, look at that low. We're breaking below it. It's going to get below it, create some panic, and then it's going to go right back up here. Again, what the market is doing now is people chasing. I kid you not, lot of people chased it up here. I'm not saying I'm not going to. I bought some shares also, and some are in this vicinity, right? I will, but keep in mind though, it's a little bit different when you're just going you're going all in long here. Like you missed out this entire move. That's different, and going to have to go through that when you're already long in below here. And then getting into some more on this move, just because maybe there's follow through, right? So let's go to transportation. So here's transportation average. As you can see on the transportation, we made new all-time. So all the major indices except the Dow and Russell, S&P, NASDAQ, SEMI, and now transportation average making new all-time highs here. And that's a higher high here. You know what I mean? And we got the higher lows. And so we want to look over long term, we want to continue to give benefit of the doubt to the buyers in the long term. If you're a long-term investor, or even if you're a long-term trader, we're not talking about swing trading, we're not talking about short-term trading, but you're long-term, right? You're a long-term investor, you're a long-term trader, you like to hold things for months and months and months, and you like to hold your shares for several years, maybe 5 years or something like that. I wouldn't worry at all going into this election. I wouldn't worry at all, and I wouldn't worry about short-term fluctuations until some of these long-term signals change. I would look at, any kind of dip as probably as an opportunity, or just know that we're, as the market is cultivating new all-time highs. As I said earlier in this video, that it has never in the history of stock market, that when the market comes back down this steep, 30%, I'll challenge you, go back, history, find it. 30% or more correction, and then in the same year, market goes up, makes new all-time highs, and then this thing coming all the way back down. You will not find that, because that has never happened. You see that kind of decline, usually that thing turns into a bear market. So usually it won't go back to make a higher high, right? That's what statistical probability suggests. Here, let's go to Russell 2000 here real quick. So Russell 2000 this is all-time high level 172 on IWM. We're kind of in that rising channel type here. And this is a bullish price action, despite what you think. People always like to, there's so much cliche technical things on Twitter. People talk about, well, that's a rising wedge, K. Rising wedge, dude. No, it doesn't. I want you to do a little bit of homework. Go back in history and draw these rising wedges. A lot of times what they'll do is, this is not even a wedge, what you're looking at right now. This is not even a wedge, but a lot of times, let's say if this becomes a wedge, a lot of times what happens is it looks like it's going to break down, boom. That's what it does. That's what wedges do. Don't ever listen to these, quote unquote cheat sheets, technical pattern, none of that. It's garbage, man. Anyway, so we got the higher lows, man, higher highs. We continue to cultivate that. It's a little bit more subtle here in the Russell 2000, but I have to say we got some good looking trend here. Again, you're never gonna have the most prettiest thing. A market will never give you perfect looking anything. But we got the higher lows. Actually, you get that. We actually made a higher high on Russell 2000. S&P didn't. S&P actually failed to make higher high here. You see right here? That's a high. That's actually not high, right? What about NASDAQ? Same with NASDAQ. NASDAQ did not make higher high. That's not a higher high. Semiconductor did. Did Diamond do? No. Diamond didn't. So semiconductor made a higher high. Transportation AIM average made a higher high, and Russell 2000 made a higher high. And this is good. It's good that at least some of these indices made a higher high, right? Out of 6, 3 of them did, and that tells us that market is still in a major uptrend here in the primary term, right? So just to recap everything here on these indices, you looked at my short-term analysis when I did on my 65-minute chart here. Obviously, we got the short-term bearish signal with the short-term potentially bullish divergence on that 65-minute chart, mid-term neutral, right? Short-term bearish, mid-term neutral. What is long-term? Bullish. That's the complete recap there. Short-term bearish, mid-term neutral, long-term bullish, right? Let's look at VIX. VIX popped. And so this is kind of thing is that, and I think I talked about this a couple of weeks ago, didn't I? Like several weeks or a couple of weeks ago, how, when the market was here, we talked about how, this was when, when things looking so good, everything's breaking out. And at this point, VIX wasn't really tanking. VIX was kind of like hanging around here. And I said, I won't be surprised. VIX pops, and all of a sudden, this market fakes a lot of people out. And so VIX actually popped here, and let's see. So we're kind of in that vicinity. We actually cleared this level, right? And one thing I would suggest you never, VIX is, if you're trying to use VIX to forecast the overall market, that's wrong way about it. VIX analysis should always just be supplement to what I've already done with these analysis. Never use VIX as your main analysis to figure out when the next correction is going to come in the market, right? Always use VIX analysis as a supplement. It's not a main dish or main nutrition. It's a supplement. So there's a resistance there, and then we broke above it. We broke above this here, and so I think next resistance here. So it's looking a little bit more bullish in VIX, while the S&P is potentially, it's funny, I just actually looked at this on the 65 minutes, so you can see on the 65 minute, no, I thought I saw bearish divergence here like this one, but it really, we kind of did, I guess, not really, kind of. That's a higher high, that's an equal high, kind of. But we'll see. So VIX is elevated, right? This is kind of, we actually gapped up here. We're hanging around here. So that tells us maybe VIX has some ways to go, but you never know. Sometimes that, again, it's deceiving. Sometimes here, I'll show you right here. If I look at this right here, what does that look like if I drew like this? Resistance like this. That's the resistance here. What does this look like? Well, okay, that looks like VIX is just ready to rock it, right? Well, it tanked. It tanked. So it's deceiving. VIX is deceiving. So you get that? Look at that. Look like the VIX is gonna rock it, but look what it did for months. From June to it just tanked. And remember that rally from 270 or 320 to 360? Was that, which move was that? No, this was this move. No, actually 300. So this was this move, 300 to 360. From here to here, there was that move. And the VIX, this was here. So look, I want you to look at this candle right there. What does it look like? Yeah, we cleared this resistance. We cleared this horizontal resistance there. That looks like it's gonna go to 70, right? You're that completely wrong, because that thing tanked for months, and S&P went from 300 to 360. So that's why you should have never done your analysis. Because if you saw VIX here, you'd have gotten extremely scared on the S&P. But if you analyze, and you guys remember when I was analyzing back in June here, right? Look at the rising pivot. Look at my midterm moving average scooping action right there. Looks bullish. Look at the pivot. Yeah. So VIX should always be a supplement, because if you look at that, you'd be deceived. Let's go to gold. Gold still doing the same thing. Again, still looks like potential. Again, it needed that. It made a big move, man. It needed some kind of a consolidation or something like that. So let's give it some more time. Here's a Bitcoin. So Bitcoin is actually elevated, holding up really well. Good news is that we got higher lows and we got higher highs. That's exactly what we've been looking at, what we've been looking for. And I've been analyzing this, Bitcoin with you guys for, I don't know, ever since I've been actually analyzing this since March lows, right? And this is exactly what I wanted to see, is cultivation of an uptrend. And so we want to see this market continue to cultivate that established, as long as we may see short-term pullback or whatever, man. It doesn't matter, because as long as we have that longer term, long to mid-term uptrend developing, it's good for the longs. Potentially, we got that resistance here, somewhere here in that vicinity, but let's not be too precise with it. Yeah, let's not be too precise with that, but I think next high to take out is 1744. It might do this, do that. I don't know how, but if we start, because that's that important swing high there, right? That's where this thing went from 17 to 5. So that's a pretty big tankage there. And then ever since then, we got this big, potentially inverted head and shoulder. Inverted head and shoulder, all it is shifting. Market shifting from the bearish downtrend to an uptrend. That's all it is. That's lower low, turning to higher low, higher highs. Bitcoin looks bullish in the midterm, but you want to be bullish in the long term too. Needs to get above this high right here at 1750 or so. Again, I don't know how it's gonna do it. It might go up like this and do this. It doesn't matter how, as long as establish that uptrend, will be good there. Well, there you have it. I will be gone for the remainder coming entire week. I will be trading. I will be looking at the market. So I will tweet things out at 2K Kim, but hopefully I giving you enough information so you can able to prepare and go through this market next week. Yeah, that's how the market plays out. And just as much as you might be fearful, just as much you can look at this market as exciting. This is what makes market exciting. Volatility is part of it. Opposition is always there. I mean, whenever you play video games or sports, what makes it exciting? Opposition. When was the last time you don't have opposition in anything you do? You're trying to accomplish. Even here on Earth, we have a gravity, which is opposition. It's part of life. This is what happens. Volatility. I don't know why everybody's always whining and moaning about everything pullback. This market is gonna give you craziness. This market is gonna give you shenanigans. It's all part of this market. Once you start trading, investing in this market, you signed up for this, right? So I think sometimes you gotta man up a little bit and willing to face volatility and look at the market objectively, right? I think then, and if you continue to cultivate that over the years, I think you'll become a better trader and investor. So I'll be gone. You guys be good. When I'm not here next week, I'll come back for you guys on the 9th of November. Is Monday. So on the 9th of November, and we'll see how the market is at the time. And we'll deal with it. We'll go through it. Right? Well, I appreciate you guys. Appreciate you interacting, following, commenting, liking these videos. Have a good Halloween weekend and have a good election week next week. Again, I'll tweet things out as much as I can and we'll go from there. Good luck trading next week.